Good afternoon. Thank you for attending today's presentation on RE Royalties. My name is Bernard Tan, and I am the CEO and co-founder of the company. Before I begin, I would like to point out that this presentation will contain some forward-looking statements. Please refer to our SEDAR filings for more information. The vision of RE Royalties is simple. One, to provide our investors with strong risk-adjusted returns, and two, to create a positive impact for the environment. RE Royalties is the first royalty company focused entirely on the renewable and sustainable energy sector. And our mission is to acquire and grow our portfolio of long-term, stable, and diversified royalties from projects around the world. We operate based on four fundamental pillars: yield, growth, capital protection, and sustainability. We started in 2016 by a team of executives from both the mining and renewable sector. In 2018, we took the company public through a RTO listing on the Venture Exchange. We recognized the opportunity to apply a well-proven business model to the renewable sector where it does not exist. We saw similar parallels to the growth of royalty financing in the mining industry in the early 2000s, which established the giants of today like Franco-Nevada and Wheaton Precious Metals. To date, we have raised and invested over $40 million to date. We currently own over 100 royalties from solar, wind, hydro, renewable natural gas, energy efficiency, and storage projects in Canada, the United States, and European Union. We are also a growth-oriented company, having deployed $26 million in investments in the past 7 months, with a strong backlog of over $40 million in near-term opportunities that we can invest in. And we were also named to the Globe and Mail's top growing companies last year. We are also an ESG and impact-oriented company, as we only invest in clean energy projects that meet the UN Sustainable Development Goals of clean energy, resilient infrastructure, sustainable communities, and climate action. So how large is this market opportunity? As most of you know, climate change, energy security, and resiliency has been and will continue to be a macroeconomic driver today and in the future. Despite the challenges with the pandemic, inflation, and geopolitical instability, 2021 saw over a record $366 billion invested globally in renewables, and US $3.4 trillion, that's with a T, since 2010. More money was spent in new renewables compared to traditional oil and gas. According to Bloomberg's estimates, this investment will have to increase to over $4.4 trillion per year if the world truly wants to reach the goals of the Paris Accords. In short, this is a very large market, and despite challenges in the general market today, will continue to grow significantly. A lot of the growth in renewables are really driven by the underlying technology improvements. As you can see on this slide, similar to smartphones and computers in the past few decades, the cost of producing and storing energy from renewables continue to drop every single year. Bloomberg estimates that today, 2/3 of the world's population live in countries where solar or wind are the cheapest source of new electricity. In many places, renewables can displace traditional coal or gas, and without subsidies. So how do we take advantage of this? As most of you know, the royalty business model is well utilized and proven in many industries, except renewables. As a first mover, we are well positioned to acquire long-term cash-flowing royalties from projects around the world. We focus only on commercially proven technologies, such as solar, wind, hydro, energy storage, and efficiency. By focusing on commercially proven technologies, we can protect our shareholders' value by not investing in science experiments. We also have a preference for projects that are already in operations or near commercial operations. Most of the projects that we invest in have long-term revenue offtakes with strong counterparties, which means immediate cash flows. Our targeted returns are generally in the 10 to 20% range, which allows us to support a strong yield to all our shareholders. Geographically, we have a preference for OECD and EU-based countries. Our goal is to ensure a diversified portfolio of royalties from various jurisdictions and across technologies. This diversification allows us to mitigate risks and protect our shareholder capital. When we invest into a project, we typically apply a combination of short-term interest-bearing loan, roughly about 6 months to 3 years, and in addition, acquire a long-term revenue royalty, typically 10 to 20 years. Currently, 80% of our portfolio utilizes this loan and royalty structure. We find this structure very effective because the loans are typically secured against our clients' assets. The royalties acquired are typically long-term and calculate based on a percentage of revenues. And when the loans are repaid by our clients, we can use those funds to reinvest and acquire new royalties. To illustrate, the step diagram on the right shows that for the same $1 million reinvested over a span of 20 years, we can create 7 different royalty streams and grow the size of cash flows with that same capital. Such is the power of reinvesting and compounding. Many of you have seen this slide before with some of the royalty companies presenting today, so I won't go over it in too much detail. But really, it is a very unique business model, and as a first mover in the renewable sector, we are primed to take advantage of it. To date, we have invested over $47 million into a variety of projects and accumulated over 100 royalties. Of this amount, as you can see from this chart, many of those projects are already in operations and currently producing cash flow. Our portfolio is diversified across different types of technologies, with 35% in solar, 31% in batteries, 16% in wind, 12% in renewable natural gas, and 12% in energy efficiency. 49% of these projects are in Canada, 43% in the US, and 8% in the European Union. These projects are operated by well-known operators such as Northland Power and AltaGas, and the revenue offtakes are with utilities like BC Hydro, Hydro One, Nova Scotia Power, or governments like the state of California or European Union. This slide here provides a snapshot of our recent investments and activity in the past 7 months. We have invested over $26 million in the last 2 quarters into 7 investments with 5 clients, with an expected unlevered IRR of 18%. This will increase our annualized revenue to roughly $4 to $4.5 million per year. As you can see, despite a challenging market environment, our growth continues to accelerate, and we continue to deliver strong results on our performance. Our backlog of deal flow continues to be very strong, with over $40 million in new opportunities that we're currently issued term sheets for and or undergoing due diligence. We do expect to complete a few of these in the coming months. As of December 31st, we have approximately 33 million common shares outstanding, with a market cap of approximately $30 million. This will increase shortly, as we currently have an open equity offering, and if you would like to learn more, please come see us at booth 713. Our shareholder base are mostly family offices, accredited and retail investors, and management, board, and insiders own about 1/3 of it. We also pay a annualized dividend of 4 cents per share, or approximately a 5% yield based on today's share price. And you can get more details on our website or on SEDAR. This slide also shows our team, whom you can meet at our booth. So, in summary, please come see us. We are at booth 17, and we would love to tell you more about what we do and how we're different. Thank you.